Okay, so a quick question from Christopher, who is asking what are the best pairs to trade during the COVID-19 crisis? Now, the COVID-19 crisis is really affecting markets through the overall risk tone. So you'll notice over recent months, as long as this crisis has been going on, we've been seeing a really strong risk off tone across markets. So what that means is then what we really want to focus on is those risk sensitive currency pairs. In other words, we're looking to combine your safe haven currencies with your high beta commodity linked currencies. Now that gives us 6 major currency pairs to really focus on if we don't include the US dollar. Now, traditionally, yes, the US dollar is a safe haven, but the dollar's influence is really a result of demand for cash. And because even though we're still getting risk off, we've had that demand for cash kind of reduce. For that reason, it's not seeing the same safe haven flows which we were seeing when we had that real rush for cash. So generally speaking, we really want to focus on the Swiss franc and the Japanese yen for your general risk on risk off tones. And then for your high betas, we have the Australian dollar, the New Zealand dollar, and the Canadian dollar. So you'll notice on the charts here, we've got your Aussie Swiss, your Aussie yen, your New Zealand dollar Swiss, your New Zealand dollar yen, your Canadian dollar Swiss, and your Canadian dollar yen. And you'll notice that throughout this whole year, they've really been selling off quite rapidly. And of course, that has been because of the coronavirus crisis. You will notice that since we've had more and more measures introduced by central banks and governments, as that risk tone has begun to calm, most of these pairs have actually seen a bit of a retracement and they have begun to pull off of their recent lows. So what we can look for here is if we continue to see this risk off tone, if we see the current measures implemented by governments and central banks, if those measures prove to be insufficient and the virus continues to spread at an increasingly aggressive rate, then eventually the sell-off is going to continue and all of these currency pairs are going to once again come under selling pressure. So if we have a very strong risk of tone, you want to be looking at selling these currency pairs. Now, conversely, if the current measures prove to be sufficient, if we start to see the spread of the virus begin to peak and begin to slow, then ultimately these are the pairs which should really benefit and recover. And at the same time, as we can see, all of these currency pairs have plenty of scope to the upside. So if we do see that material shift back to risk on, we'd expect to see significant strength in Aussie Swiss, Aussie yen, New Zealand dollar Swiss, New Zealand dollar yen, and Canadian dollar Swiss, Canadian dollar yen. Now, as a slight side note, just for the Canadian dollar pairs, it's also important to keep an eye on oil prices because that is another big influence for the Canadian dollar. And as we now seem to have a bit of a price war going on with oil, that still proves downside risks. So if we do see that recovery to risk on, we'll also be looking for oil prices to recover for a high conviction CAD long base trade. Or alternatively, if we continue to see oil prices remain pressured and we see a further shift to risk off, then you've got a brilliant setup for a CAD short base trade.